Hey guys, Eric here, Mr. Fired Up Wealth. Today I'm bringing you the biggest IPO of 2020 to date. It's in the biotech space. It's even bigger than Moderna's IPO back in 2018. Of course, I'm talking about Royalty Pharma. Now this thing was supposed to open up at 28. Of course, it opened in the 40s, shot above $50. It just pulled back below 50. Is it a buy? Stay tuned to find out. Okay, so many people are calling this the golden age of biotech research, and I agree. So how do we, as investors, get in on this action? Well, if you know anything about biotechs, they're extremely risky. You're talking about clinical trials, you're talking about pipelines, about drugs that you can't even pronounce. And most of the times with these small biotech companies, you're really making speculative bets that these drugs are going to pay off. There's really no way to know that they're going to work. And so as investors, how do we eliminate some of that risk and still get some of the reward upside? I think that this company, Royalty Pharma is a great way to play the space. They're basically a biotech hedge fund. They do a lot of the heavy lifting for us. So let's take a look under the hood and see what's going on. Okay, so how does Royalty Pharma operate? How do they get the royalties to make money? They target the largest and most profitable drugs, and you're seeing some on your screen. I'm going to get to the full pipeline here in a minute. These are the kind of drugs that change people's lives in a very positive way, and something as an investor that I like to get behind. But how do they do it? A couple different ways, but one is working with large universities and hospitals. You think of research universities and hospitals. They work with these guys to acquire these drug royalties that they think are going to be a hit, and they pay them a large upfront fee. And this allows these scientific innovators to plow that money back into research and development for the next innovation. Okay, so let's take a look at the drug pipeline just to give you an idea of the scale, because it's really massive. And this is cool. This is on their website. Just go to Royalty Pharma, go into portfolio. It shows you on the left-hand side the product, shows you the marketer, the indicators, year of acquisition, status of acquisition, and then the royalty seller on the right. You don't need to understand necessarily what all this means, but you'll recognize a lot of these names, from Massachusetts General Hospital as the royalty seller to the marketer over here, Celgene, Bristol Myers Squibb. You got Merck, you've got Eli Lilly, you've got Novartis, you've got Biogen, Pfizer, on and on and on. Vertex, you've heard that name, right? You've got Roche, you've got down here, I want to show AstraZeneca, Gilead Sciences, Johnson & Johnson, AbbVie, another Bristol Myers Squibb. This is really cool. Emory University has a lot of research. So Emory University has done a tremendous job of getting some of these drugs to market. And essentially, Royalty Pharma goes to someone like Emory University, pays them a big upfront fee so that they get the royalties, and Emory is able to take that money and plow it back into research. But when you look at this, there's 45 marketed therapies currently. There's 300 in development. 22 of the 45 marketed drugs have generated sales of over $1 billion, and 7 of these have raked in over $3 billion in annual sales, which is impressive. Of course, these royalties are just a small percentage of their overall sales, but you get an idea of the opportunity here. It's massive. Let's take a quick look at the history and management of the company. They were actually founded back in 1996, so they've been around for a long time. They're really a pioneer of the drug royalty market, like I mentioned earlier. Between 1996 and 2019, the company deployed $18 billion to acquire biotech royalties, which is estimated to be about half of all royalty transactions over that same period. Now that's impressive. Here's the CEO. I wanted to show you him really quick. Pablo Legorreta, and he's been on CNBC and he's been on Kramer and all that kind of stuff. But he seems really legit, experienced, smart, really well spoken. What I wanted to point out too is he's been with the company since 1996, and I do like how this is written. I don't know why I look at stuff like this. It says that he has over 20 years of experience investing in pharmaceutical royalties, but then you can see down here that he founded the company. Prior to founding Royalty Pharma in 1996, he was an investment banker. Okay, so he's an investment banker, and he's been doing this for over 20 years with these royalties in biotech. But I like how they say it, over 20 years. Yeah, over 20 years. He started the company in 1996. I mean, that's 24 years. I mean, this guy has tremendous experience. He's well-spoken. You look at the overall leadership team, and it's very positive. You look at the board of the directors. Everybody across the board is legit, well-respected in the industry. I really, really like this management team, and it's one of the reasons that I'm going to invest in the stock. Okay, so this part is very interesting, so please pay attention. Royalty Pharma also targets phase 3 drugs. And if you're familiar with how phases work in clinical trials, I've got a chart up on your screen. Phase 1 is usually between 1 and 6 months. Phase 2 is 3 to 18 months. Phase 3 can be anywhere from 12 to 30 months and is usually very expensive and complicated and takes expertise and money and all those things. So what Royalty Pharma does is they'll go out and target these small, aggressive, innovative biotech companies, the ones that we discussed earlier being high risk reward, where you can gain 500% or you can lose your shorts overnight. They go out though, and they'll work with these guys and do the heavy lifting for us as investors. They're going to go out and do the due diligence to see if these are legitimate drugs and if they think they're going to be successful and profitable. And they'll actually go out and go after a drug that's in phase 3 already and take them to the finish line. The reason that's important is that venture capitalists typically do phase 1 and phase 2, but a lot of times don't have the expertise or capital to get them across the finish line in phase 3. And without a company with deep pockets like Royalty Pharma with their expertise and money, the large pharma companies typically have a massive advantage over these smaller ones because they have the capital and scale to get things done in phase 3. So in essence, Royalty Pharma accelerates innovation for mankind, which is something I can really get behind as an investor. All right, guys, so what are the risks? With anyone in this space, the risk is always going to be a pipeline. The pipeline constantly has drugs that are going to be expiring, that are going to go to generic. And so they have to constantly be working hard to find the next winner and always keep the pipeline busy. It's a never-ending process. Additionally, large companies like Blackstone and TPG see money in this space and they're starting to go after it. And so they're starting to compete. According to Royalty Pharma's CEO on CNBC, the R&D ecosystem is so big worldwide that there's room for many participants in the royalty space. He said that $300 billion a year is invested in medical research across the globe, $100 billion of that from universities and governments, and $200 billion of that from biotech and pharmaceutical companies. He also said that Royalty Pharma has advantages in scale, being 5 to 10 times larger than any competitor, and this makes cost on capital extremely efficient. Lastly, he mentioned going public as an advantage for the company since they now have access to the capital markets and the currency can be used for additional acquisitions. For me, what I'm going to do with this one, guys, is I'm going to buy a small position probably this week. It has dipped a little bit in the last couple of days. It's now under 50. And I'm going to wait for a pullback. If there is a pullback, I'm going to dollar cost average in and eventually load up the truck. But be careful with this one. It's one of those deals. It's an IPO that ran from the start. And usually what happens is it runs up hard and then it falls hard. And it's usually an opportunity. That doesn't always work that way. Sometimes they just go up and never come down. So I'm going to buy a little bit. If it keeps running, I win. If it drops, great, because now I can get my full position that I want. So that's what I'm looking to do with this one, guys. It's Royalty Pharma. Check it out. The stock ticker on this one is RPRX. You can see the chart here on your screen. I'll zoom in. If you haven't subscribed to the channel, please do. Bottom right-hand corner, please click that and the little bell for notifications. We also have a Facebook group, so please check that out. Thanks for watching. Thanks for your time and attention. Have a great rest of your day. Take care.